Okay, cool. Yeah, something is wrong. I never seen it behaving this way. Okay.
A bit lag.
Yeah, I'm gonna off this again. Yeah, no, not yet. Yeah, just replace the camera. Okay. All right, guys. Thank you for coming in today. We are very, very, very privileged to have the audience of Mr. Christopher Tan from Providend. He's the CEO. Okay. Yeah, CEO. Okay, he's the CEO of Providend, and he's a mega big shot in the finance industry. Okay, this is called Hao Xiao shot. Okay, this is real big shot. Okay, then a lot of people call Mr. Lu guru. They know. Actually, I'm the gundu. He's the guru. Understand?
That was the word I used for myself just now.
Okay,
You don't
so
take my word.
this is 真材实料. Okay, yes. So can you all please really give a huge blast of like, especially those on YouTube. You didn't log in. Okay, and make sure that you give a like as well. Okay. Yes. So Jackie, good to see you. Yes, looking for sharing. Okay. Yes, not on YouTube. I watched the interview on Channel 8 News before. Yeah, he always appear on the news. I only appear in the MRT only. Yeah. So only when you are on only MRT, only a few stations. So this one bigger shot.
Appear in the news may not be
all
good thing.
professionals.
Yeah, this one is 真的.
Appear in the news may not be good thing.
We all roadside.
被抓 also go up the
We all roadside handbag seller. Mr. Tan, I know you. Wow.
See?
Yeah. So yes. Good afternoon, everybody. Yes. Okay. Good afternoon, Mr. and Mrs. Stewart. Yeah. Okay. So I'll let B say hello to Premium More Fences.
Hello, hi, we're back. Okay. So when we're back, we bring you, speakers, professional speakers like Chris. Okay. Hope y'all can hear what he can say. Okay. And yeah, in terms like this, right? It's actually quite interesting to know, what experts like him, right, will advise to do. Some kind of sharing. Okay. Yeah. So hope you all enjoy it. Okay.
Okay, cool. You also 真的. He is lagi 真. Okay. We all are K one. Yeah. Okay. These people, this kind of thing is 探价 one. Okay. We all not 探价. Okay. So yes. Oops. Sorry. Yes. We are not 探价 one. So okay. Okay. Just let the people stream in. Okay. What we'll do is that we have a Q&A session. I prepared a list of questions to bomb him. Okay, because he's the damn good one. So very easy for me. I just ask question, he answer. Every time you ask me question, a lot of times I don't know how to answer because your question too cheap. Now I ask him the best.
If I don't know, then I ask you back.
Yeah. Okay. Yes. Okay. You copy and paste. Hello B. A lot of people say hello to you B.
Hello.
Yes. I attended CPF talk with two of you before as speakers.
Okay.
He's always the guru and the gundu. Okay, this one I learned from. Yeah. Okay. Supply, good to see you. Yes. Eileen, good to see you. Janice, good to see you. Okay. Yes. Oya, good to see you. All right. Give a huge blast of light. Okay. We have got quite a lot of people here right now. It's a Saturday afternoon. It's an unusual time today. Okay, it's an unusual time today. There's a lot of turbulence in the market, Last 2 weeks, the stock market laosai, and then suddenly, yesterday the stock market shoot to the roof, Mr. Lu doing a lot of activity. A lot of people ask, what should we do and things like that. Okay, so again, right, this is roadside handbag seller. So ask me, not as good as ask the expert. Okay, yes, cool. All right, good. Okay, huge blast of light. Oh yeah, good afternoon from Philippines. We have got it.
Oh,
so
wow.
Yeah, great. Okay, we got Philippines. I saw Uncle what? Oh shucks. Okay,
Uncle.
He can manage other people money. We only manage out of our own money. I saw Uncle Lu just before Doctor Strange movie start. Oh, the TV. Yeah, I see. Yes, cool. Okay, great. All right, good. Okay. All right, good. Ignore that. Yeah. Okay. So there's a lot of questions coming in. Hold your questions for a while. I ask a few questions, then we'll try to anticipate some of these questions. Okay. Yes. Okay. So the topic for today, we are split into two big parts and one small one. Okay. Yes. First of all, just to make it very clear, it is I invite Christopher Tan in. Okay. Providend, the company which is the CEO, never pay me a single cent. Okay. I think that we are very, very privileged to have him sitting with us to share his wonderful, 50 years of knowledge, okay?
50 years.
Yeah, okay. So please, appreciate this, okay? Yes, appreciate this. The second thing is that, the topic for today, they are split into two parts. The first one is, how do you do well or survive in a turbulent time like this, okay? He has gone through many more turbulence than I did, okay? Don't look at him, he look young, but he's much older than I am. 不要让他骗, he just look young, okay? I am young but look old, but he is old but look young, okay? Cool? Yes. Yeah. Then the second thing, what is Facebook? This side no reaction one, oh no? Yeah.
So it's
Okay.
Facebook now.
Yeah, both are Facebook.
Oh,
Yeah.
okay.
Facebook and Facebook too. Okay, I'm looking at it. Okay. Then the second important topic we are going to cover is Christopher Tan. The company manages a lot of funds for people. He's an incredible wealth manager for people. And you know what? His clients are atas one. Low class people like me, he don't serve one. Yeah, okay.
But you're
He
my
only-
client.
By mistake, he thought I'm a big client. Then he realized, after serving me, then he realized I'm a small client. But he served only big short clients. So I took the chance and say, hey Christopher, you know so many rich people, so many clients can share the secret of how the rich become rich, So you want to learn or not? You want to learn today, huge blast of like and share, okay? Yes, okay. So we'll be very happy. Good afternoon. Yes, Chilin, good afternoon to you, okay? Yeah, Mr. Lu, you're right. Yeah, hello, Mr. CEO. Yeah, people call you hello, Mr. CEO. Yes.
Pauline.
Okay, cool. Are you ready? Okay. If you guys are ready, okay, let's start. Okay, let's start. I got list of questions here, but more importantly is your question. Okay, it's your question. But hold your question first. We warm up a little bit with my question so that we'll cover more. Then we'll start answering your question. How about it? So those people who we miss the question, your question run away because the question come like that one. So we miss already. Ask again. Bien paiseh one. Okay, Mr. Christopher Tan, very humble man. Okay, yes, extremely humble. Although he wear jacket, but he's humble. Okay, he wear jacket because he's cold.
Where you get this proud?
Yeah. Wear jacket means ulu one or usay din one. Wear t-shirt means lock up one. Okay. Anyway, are you guys ready? If you are ready, let me know. Okay. Hey, the Facebook always so meow one. Can you please log in and click the like so that you promote? Yeah. He always impress interview. You are right, man. I only appear in MRT, but he appeared all media, newspaper, TV, radio, internet. Everywhere. Next time POP maybe. Okay, anyway,
No.
I got cross the line with you. Okay, yeah, okay. Caught live by chance. Wow, you hang. Okay, hope to learn more. If you learn from this guy, you jiak wei liao. Yeah, okay, jiak wei liao. Ready? Okay, cool. Okay, huge plus like. Okay, ready? Okay, good. Okay, now we have about 300, 400, 500, 500 plus 600 people. Yes, I think we are good to go. Okay, cool. Okay, great. Okay. So, ladies and gentlemen, let me introduce formally Mr. Christopher Tan, founder and CEO of Providend. Providend, okay, Providend is really a mid-size fund, atas, not mid-size, atas, wealth management company, wealth advisory management company. Okay, they serve really the atas kind of people. Okay, and they were founded in 2001. Interestingly, 2001 2001 is a tough time to set up.
September 11,
Wow.
2001.
September 11, 2001. Wow, you all got guts to set up on that day. Okay. They are licensed by MAS. Okay. So he's allowed to say a lot of things that I cannot say. Okay. Yes, I cannot give advice, but he can give advice. So a lot of those disclaimer I always put in. Yeah. So again today, Mr. Lu, whatever he say, just ignore. Just listen to him. Okay. Yes. So it's a great man. Ladies and gentlemen, put your hands to welcome Mr. Christopher Tan. Okay, I'll let you just say something first, and then I'll ask a question.
Hello everybody, just very honored, very privileged to be here to do this with Lu. Whatever he said earlier on is just for fun. It's not real. We are both gundus, not really gurus.
Because my TI Kong, they are really good. If not, all the news agency won't invite him. Nobody invite me. Okay, anyway.
But what he has introduced us, or rather he has introduced me and Providend, but I am not the investment guy in the company, right? Although I run the firm, we have got a team of people who are in charge of investments. I'll do my best to answer as many questions as I can. But if I cannot, I'll ask him. If he cannot, then we turn to the left and we ask our colleagues.
Here also got a lot of experts, okay? Yeah, there's one very shy expert over there, okay? If I say also very good one. Yes. Okay, cool. Yeah, so Mr. Christopher Tan has been in the industry for 20 over years, okay? Solid experience, okay? So his experience is not just not just from textbook, but from learning and from experience of other people. So I think it is an incredible chance. A lot of people ask where we are. We are in Singapore right now. This is the Providend office. Okay, it's in Duxton Hill, atas place. Only Ului company can have office like this. Yeah, people like us always got to do live show in borrowed offices. Right? Okay. Remember, I always do live show in borrowed stores, borrowed offices, and things like. Sometimes even roadside in cafe. But this time around, of course, use atas office. Right? Cool. Yes. Okay. Cool. Okay. With this, maybe let's start. Okay. So, Chris, now is very jalat time. Okay. Jalat time. It's uncertainty. You know. It's not jalat. You know. It's a lot of unusual time. You got war going on. You know, Russia whack Ukraine. Then itself kena whack left, right, center. Then inflation going up because all these kind of things happening. Then this thing the Federal Reserve have been printing money, making money so in huge amount, right? As a result, inflation go up and up and down. Then suddenly now tarik back, cannot print it. Now increase interest rate. Suddenly all the stock market, outside and things like that. And now also China now got all this COVID lockdown and things like that, So what do you see is happening? Everybody asks me, so what will happen next week? What happened next month? What happened? What happened? All of us. A lot of people panic. The night at 10:30 when the stock market, I got this like prompting. I just felt I need to turn on the light and tell everybody, calm down. That night when I turned on, 1,000 people came in.
Really?
Yeah, 1,000 people came in that night. Not planned. And say, Mr. Lu, how? Okay. You know what? After I say that night, okay, I want now expert to come and tell you in a cool, calm Saturday, not like that night, so panicky, right? Okay, so over to you. What do you think? How do you see the environment now?
I think first of all, we need to understand what is causing the market to come down, and I think it's no secret. Everybody knows it's inflation, but maybe let's take a few steps behind and understand what causes the inflation, right? And you have actually said it already. Right, so 2 years ago, when we were in the pandemic, the government was worried about the economy, right? Because every place there is a lockdown, and when there's a lockdown, people cannot buy stuff, people cannot supply stuff. There's basically no trade. Right? When there's no business to be done, then the economy goes down. So the government was very worried. The governments around the world were very worried. The government started printing money. Now, what does printing money mean? It doesn't mean that the government physically print more dollar notes and mint more coins. Everything is digitalized, right? So basically, they just press one button and then the money appears on
the
balance sheet. So the central bank, the Fed printed money. And so what do the government use this money for? Well, they use this money to go and buy what we call assets. They use money to go and buy bonds, the treasuries. They buy back these treasuries. Treasury means government bond, right? And financial institutions like banks actually own these bonds, right? So now imagine this, and suddenly the government has got a lot of money. They go to the financial institutions such as the bank to go and buy all these treasuries. And now the bank has got a lot of money. And when the bank has got a lot of money, what do? Then they are very, very interested to actually go and lend it out, right? And because there are a lot of money to be lent out, interest rates drop because there's a lot of supply, right? So when there's a lot of supply of money, interest rate drop. And so people are all encouraged, and not just consumers are encouraged to borrow money, companies are also encouraged to borrow money. So with all this borrowing, 5 things. As a result, inflation goes up, prices goes up. To make matters worse, supply drop. Why supply drop? Because of COVID. Because of COVID, there's supply chain disruption, we know. If you remember, there was a period during the COVID, when you order things from China, it takes a long time to come. I mean, last time we ordered it, 2-3 days come already.
Yeah, sometimes I wonder, like China is like Singapore, like that. They don't know how they deliver so fast.
Yeah, so
Yeah.
it took a long time. Some don't even know whether you will turn up or not because basically people cannot go to work, right? So now the supply is lesser, the demand is more, prices go up. And now to make matters worse, that you mentioned, there is the Ukraine and Russia war.
Yeah.
Many people do not know that Russia is the number one exporter of natural gas.
Okay, give me a minute.
Yeah.
People on YouTube, you all cannot hear Christopher, or is it you all cannot hear Christopher, or you all cannot hear me, or he say you're too soft.
Too soft.
Can you all hear me? Okay, can you all hear me? Just even I shift the camera a little bit nearer. Okay, sorry. Okay. Yep. Okay, guys. Okay, wait. YouTube is a little bit soft. I'm gonna shift it closer to Christopher.
Okay.
Yes. Okay. Wait. 听得到吗?
I must
Okay.
go so near and speak.
Yes. Okay. It's just okay. A bit soft. Can hear.
Is it okay?
We
Is it
can
better?
hear Mr. Lu. Cannot hear Mr. Tan.
Wow,
Okay.
okay.
No, don't. He's trying to be very professional today. I'm.
What if I try to be very professional?
No, that's why he speak a bit more soft. Okay, Mr. Lu is loud and clear. Mr. is too loud. Mr. Lu trained by B to be a handbag seller, so gonna be loud. Yeah, can hear both now. Okay, cool. Okay, so your eyes have to run around. Okay,
Right,
cool.
Okay. So just to continue, so I mentioned inflation go up because there is a lot of demand for goods and services due to loans. Then supply came down because of supply chain disruption due to COVID, right? And the war in Ukraine and Russia made it worse. Why did it made it worse? Well, we may not know, but Russia is like the number one exporter for natural gas to the world, and number two in terms of oil. So now we know that the whole world is like sanctioning Russia.
The gunmen.
So now there is a lack of supply in energy, right?
Yeah.
Ukraine, many of us may not know, but Ukraine is a great exporter of commodities like sunflower seed, corn, and all that. And with the war, nobody's going to work. So now there is lack of supply in commodities. So commodity prices go up. So it basically causes inflation to skyrocket. So this is like the opposite of before COVID. So inflation goes up. So now the government, like what you say, what they need to do is that they need to increase interest rate, right? So
Why did we interest rate?
So two things, right? So firstly, they increase interest rate.
Yep.
Secondly,
Just look at them, don't look at me.
they stop. I look at you.
Don't look at me. Look at them. Yeah.
Secondly,
okay, my face not handsome enough.
Secondly, they stop buying assets. Just now I was
Sure.
saying that they go to the banks and buy assets, so
Sure.
they stop buying assets. So when they do this thing, right? So firstly, when they increase interest rate, then become more expensive to borrow.
Yeah.
So when it becomes more expensive to borrow, so I think what the government is trying to do is they're trying to tame inflation. Because people borrow less, they can buy less. You buy less, demand drop, hopefully price drop. I mentioned the second thing is that the US government just announced that they are going to stop buying all these treasuries from the financial institution. So the minute they do that, right, that affects the price of bonds. So bond price will drop. So a lot of forces, I mean, it's not happening, like in sequence. Everything happens at the same time. The government stopped buying the bonds, bond price dropped, the government increased interest rate. When the government increased interest rate, what happened? Well, the bond price will also drop. Why? Because when the government increased interest rate, the existing bonds that you have, the interest is no longer as interesting, right? Last time, maybe you buy a bond, maybe 1%, 2% is interesting for you. But when interest rate goes up, now your bond is not so interesting. And if you want to sell the bond, you got to sell it cheaper. Otherwise, nobody is going to buy your bond. So, well, all these things is causing bond price to fall. So for those of us who are investors, the last 5 months, this period is a very bad time if you hold bonds. If you hold high yield bonds, lagi worse.
Mr. Lu got a bit, right?
Right, and
yes.
Equities is also not doing very well as well because now it's uncertain. People are afraid that if the government keep on increasing interest rate, we may go into a recession. And if there is a recession, people lose their job, people cannot buy things anymore, then we may tip into a recession. So, well, because of all these things, right now, I know there's like no place to hide. You buy bond price drop, you buy equities, yeah, you're losing money as well.
Yeah, actually now you buy anything also see everything also dangerous. You buy bonds, bond drop. You buy equities lao sai. You buy, sorry, someone say I talk too loud. Okay, yeah. So
Just now cannot hear.
no, I too loud. Okay, sorry. Then if you that only CPF is good and stable. Yeah. By the way, this is a big fan of CPF also.
Yes.
He's so big shot that CPF invited him once upon a time to be CPF advisor, in one of committee. Yeah. So anyway, okay, sorry, that's distraction. So you buy crypto, crypto lagi see yeah. Luna died. Okay.
Terra also.
Yeah. So very dangerous. So maybe in this kind of crisis time, it's very kanchong. That night, walao, I tell you, you see the stock market, The question is right now, everybody asks, okay, the loud side very loud. Sorry. Sorry. He's soft, that's why I try to be more, a bit more gentle.
You can be a bit softer.
I can be a bit softer. Is it? Okay, sorry guys, I be softer, too loud, okay? So very important is this, okay? The question from Christopher Tan is, how do you stay calm in not so calm times like this? Yeah, from your experience. This guy Gong Li, level 10, okay?
No, I think right now everybody is so afraid of inflation, and suddenly everybody is talking about inflation, right? I mean, a couple of years ago, nobody is talking about inflation. I think the first thing we need to understand is that inflation is always present. We always have inflation. The problem right now is that the markets are not happy that we suddenly see a rise of inflation in such a short period. That's what is causing the market to fall. And we have explained, what is causing the inflation.
This morning, my nasi lemak at Adam Road, the price went up by $1 or $2, Yeah. And then I just come back to Singapore only. Every food, your experience is on all the hawker, sorry, I whisper, all the hawker center, all went up by $1, $2, $3, one plate, yesterday I was like, Singapore is jialat. I didn't realize it's that bad. Yeah. So yes, what are you going to do? It's very, very, very frightening. Yeah.
Yeah. So we talk about what caused the inflation, right? So it was QE, the printing of money, that caused inflation, but QE is over, right? And then we say supply chain disruption in China that is causing the inflation. But these two shall pass. I mean, this supply chain disruption cannot be forever, right? I mean, China may change their policy. I mean, now they are going for zero COVID, but there's a possibility that they may change and things will go back to normal. I mean, you cannot fight the war forever. At some point in time, the war has to stop. So this will pass. So let's stay calm, because whilst we know that, inflation is high now, as a result, the interest rate is being pushed up. One day, the inflation will be over, right? And when that is over, interest rate will come back down. The government cannot keep on increase interest rate forever. They are also very worried that, if they overdo it, the whole economy goes into the recession, and then it's actually worse, right? So let's remember this. I mean, whilst we are very afraid, this period is a temporary period.
Remember,
it will pass.
It will pass, okay? Don't frighten, it will pass. That's a very important thing.
And very interestingly, I was reading the podcast for my company. It's called the Money Wisdom podcast. It can be found in Spotify, I think Apple Podcasts and all that. And I was reading from my book, and that particular article that I read, or those few articles that I read, were articles that I wrote like 12 years ago in 2008. I don't know how many of you were investing in 2008. I know Lou went through 2008.
Yes.
My company went through 2008.
Yeah.
And if you go through 2008, for those of us who remember, it was very scary. In fact, I think the fear was a lot more in 2008.
It's a chicken feed compared to 2008.
Because 3 months, the market came down a lot, right? I think if you invested
50%.
in the S&P 500, it went up and down. And by the time the year ended, the S&P was down like about close to 40%, right? And a lot of the drop came after, if I'm not wrong, 29th of September 2008. So there were a lot of fears. But even then, that has passed. 6 months later, after March of 2009, the markets recovered. So when I was reading the podcast, it was very interesting because I was writing about the fears then in the market. And as I was reading it, I realized that it's the same thing. We are going through the same thing again. So if you are panicking right now, let me just say that this will pass, because inflation cannot keep going up, interest rate cannot keep going up. It's a business cycle. Well, we'll come back to normalcy again.
Okay, a lot of people asking the magic question.
Mm.
As we come, it will pass. When? Yeah, everybody asks when, you know. And what do we do now? What we do now in the time being, you know, we got money now, what do we do? Hold money also die, don't hold money also die.
Yeah.
Invest also die.
Yeah. Now, it's a good question. Unfortunately, I don't think anyone can tell you exactly when it will come down, right? Because if we can, then we wouldn't be sitting here, right? We'll know exactly when to sell out and exactly when to buy. But is it really important to know when? It is only important to know when if you are greedy. Only if you are greedy, you need to know exactly when to get out of the market and when to go into the market. If you are not greedy, you don't need to know, because all you need to know, and this is from almost 100 years of history, that the stock market goes up, generally up in the long run. If you look at 100 years of the S&P 500 data, it has been the case. If you look at MSCI World Index from 1970, it has gone through wars, Iraq War twice. The market has came down before 20-30%. The Dow has came down before 20-30% from 1970 until today. Well, we have September 11 during this period. We have many other things, right? We have natural disaster. Some of us remember Hurricane Katrina. We have the oil crisis in the 1970s, right? So the world has gone through all these things. But if you had invested in the MSCI World 1970 and go through all these things, you will still be making lots of money. So there is no need to know when exactly. And honestly, nobody knows when. I know sometimes investment professionals, so-called experts, fund managers will tell you that I know when, right? And I'm going to time the market accurately. But in truth, and when I say it's from evidence, most people cannot correctly guess it most of the time. But if you know that it's going to go generally up, if you have already invested your money, but let me qualify this, you must be invested in the right things.
Crypto,
right?
Luna.
So if you invested in the wrong things, then staying invested for long term doesn't make you money.
Yes.
If you invested in 1-2 stock and the stock is a lousy stock, then in the long term you may not make money, right? So if you invest in the right things, if you've been listening to Lou all this time, you invested in the index, you know, whether it's the S&P 500, then you can stay invested. You don't have to worry, yeah. And if you have invested in maybe a good, say for example, bond fund, right? Now, the thing about bond fund managers is this: the bonds that they buy will mature, right? It has to mature, right? Because when they buy a bond, maybe you'll mature in 2 years' time, 5 years' time. When it mature, you know that, well, if the bonds that are buying are good corporate bonds, you're not going to lose money despite the up and down of the market. The bond, not going to lose money, the capital will come back. Now the fund manager has to redeploy. And when they redeploy and buy the new bonds now, the bonds will give them a higher expected return, right? Because the bond price has fallen. So actually your bond manager is actually doing a lot of selling or waiting for the bonds to mature and buying new bonds with a higher expected returns. If you've got extra cash now and you are buying into the stock, you are getting a higher expected rate of return because the markets have fallen. So let me summarize by saying, if you are invested, correct things, don't panic. This short term
don't
pass.
Don't kanchong, okay?
It will come back, so stay invested.
Yes.
If you have got some spare cash over and above your emergency fund, you can slowly put into the market. If you have a good bond fund, don't worry, the bond manager should be doing their job in helping you buy even cheaper bonds.
Yeah. So very important, So not just Mr. Lu say, now is Guru, Mr. Christopher Tan say, my kanchong, it will pass, right? That after the storm, that for sure there will be sunny days ahead. Okay, don't kanchong. Second thing is, don't worry if you are invested in those good funds or index and things like that, you know. But you got to be worried if you can buy crypto, Luna, and all this kind of thing. Very speculative thing, very dangerous. I tell you already. Even expert like him, with so much experience, also say the same thing. Yeah. So even roadside seller and me also know this, right? So you all really need to learn from the experts on this thing, right? And the other one thing is that what he say. I hope you all caught it now. You cannot predict when and the whole recovery will come, right? So he actually said deploy slowly into the market, right? Mr. Lu nibble into the market, right? So I think very sound. Thank goodness he say what he say happened to be all online. We always say
copy you
more lah. Where got time to listen to my talk, right?
I did.
Rubbish, never have time to listen to my
No,
talk.
but I want to add on by saying this, right? So I mean, a lot of times when we hear all this investment outlook, economic data produced by economists, right? And
Economists.
we
Roadside economists, sorry.
home economists.
Roadside economists.
Home economics. So when we listen to all this economic data and investment outlook, actually many of us do not realize that this information is not meant for us to make long-term investment decisions, right? When the economists give you all this data about recession and all that, it is a bit, the analogy is that it is a bit like the weather report. It tells you what's going to happen in the next few hours. Right? I mean, you don't get a weatherman telling you for sure that they know what's going to happen in the next 5 months. It's not possible, right? So when the economist is giving you an outlook, it's giving you a short-term outlook. The short-term outlook, listen, is not meant for you to change your long-term investment decision. The economist telling you all this short-term information is actually to help you make possible necessary adjustment to your short-term financial planning decision. Such as, well, your expenses. Now, if you know that, well, the world may be going into a recession, right? And you know that in the next 6 to 12 months, and our Prime Minister has also said this, that Singapore might go into a recession. Now, what do? Well, if your response is, well, I'm going to sell all my stock, that is the wrong response.
My kanchong.
Yeah, because if you are invested in the right things, and we have said it again and again, right? It will pass, right? The market will come back again. The correct response then would be that, okay, if we are going to go into a recession, if I'm about to take a huge loan to buy a big ticket item, perhaps I want to sit down and consider whether this is the best time to do it. I may want to sit down and ask myself whether will I lose my job, the job that I'm in, right? And if that is a possibility, maybe now I better take time to build up my emergency fund instead of investing into the market. So the all these data that they're not useless, right? They're not useless, but it's just that people use the information wrongly to go and adjust their long-term investment decision, which is wrong. You should actually make adjustment if necessary to your short-term financial planning decision so that your financial health can be strong. Because if your short-term financial planning, your short-term financial health is strong, then you would be able to better weather the storm that is coming, right? So it is like, again, like I use the analogy of the weatherman, right? So if the weatherman is telling you that, it's going to rain in the next few hours, but if you need to go to work, you go to work. You don't call your boss and say, boss, the weatherman says that it's going to rain, so I cannot go to work. You get sacked, right? You still go to work, but the information is so that you can better prepare yourself, bring an umbrella, leave home earlier, so that you can still get to work. So please use the information wisely.
Okay, cool. So a question has been running around, and it is, so right now, if I got cash, I want to invest, how to do, what to do?
Right.
Yeah.
So the first question is this cash your emergency fund? If it is an emergency fund, no go. Right? Because if it's an emergency fund, and we have just said, right, the next 6 months, 12 months, there could be a recession. And there is no guarantee you can keep your job. So if it's an emergency fund, you better keep your emergency fund. So emergency fund, no go. But if this is cash that is above your emergency fund, sure, you can go in and put it into the markets. And again, it depends on what you invest in. I don't know about Lou. I do not know a lot of other investments because I'm not greedy. So I use a lot of index. I use a lot of not just S&P, but I also buy into the MSCI All Country World Index because that includes emerging markets, right? I like diversification. In the first April, just use April for example, right? The S&P 500 dropped a lot more than the MSCI World, or rather the S&P 500 dropped, not a lot more, dropped more than the MSCI World All Country World Index. Right? I think the S&P 500 in April dropped like 8%. The MSCI All Country, which includes emerging markets, dropped about I think 7%. But that's because the emerging markets held up better during this period. So if you are diversified, right, then overall you are not as bad. So if you are investing in these things, yes, you can use your cash to invest into this market. But my suggestion is this. My suggestion is go in tranches, right? Don't be so greedy that you put in everything
all at one go.
Right, so because we do not know how things is going to pan out, so every time it drops, you may just want to nimble a bit. You just buy a bit. But again, please do not use your emergency fund to do it.
So one question people ask is, how much to shoot each time? Let's say I've got $10. I have to put in the stock market. Do I break into $1, $1, spread over 10 months? Or 6 months, or how to do it, yeah.
So it's really your comfort level, right? Back in our firm, when we advise our clients, we usually say over 3 to 6 tranches, right? So over 3 to 6 tranches means that if we use the example of $10, and each time you put $3, $4. But if you don't feel so comfortable, you can spread over a longer period of time, right? I mean, there's no real science behind it. It is really what you are comfortable with. Yeah.
Okay. By the way, there's some people who say that, a big fan of Chris Tan and Keith. And Keith is great. A lot of people say, and Keith is just over there. Okay.
He can pop his head in.
Keith is the writer behind Investment Mode. Si Bei Gao, wise man. Hair about the same as me. Okay. Yeah. So people.
He's more gao than both of us.
Yeah. Both of us combined together, not anywhere smarter than him. Okay. Maybe one day you will feel good about talking in front of camera, okay? But anyway, so I will relay your hello to Keith over there.
Maybe you should turn the camera.
No lah, okay. But anyway, just to let you know, okay, behind these great men are great lieutenants. These guys sit on shoulders of giants. Yeah.
They just make me look better.
Yeah. Okay. So I think it's very good. I just want to say, just want to reiterate what Chris say. 3 to 6 tranches, what he says, don't be defined, like 3 to 6 tranches, spread it out, don't jibaboom all one down, okay? More or less, this is kind of what I do also, okay? I don't even know whether, I don't even know whether I'm, is it 3 or 6, but I really, kind of spread it out, right? So that we can buy on the down and up, yes. Right, cool, okay? To follow the tranches, yeah, okay. And very important, this is one I want to ask, and then after we open for a fierce Q&A, okay? Yes, 3 wise men, but the wisdom not the same. I'm the lowest. This one and that one much higher, okay? Big fan of his article. Yeah, exactly. See, a lot of people, hey, Keith, you got solid fans here, no? Yeah, okay? Yeah, so please go to his website, Investment Mode.
Hi, Jackie.
Yeah, okay, Investment Mode. So anyway, sorry. I'm a big fan of S&P 500, everybody knows that, okay? I'm also a big fan of the NASDAQ, okay? In fact, a few days ago, I went on the NASDAQ. But actually, there's a lot more funds that behave in the same nature, and, maybe you can xiao a little bit, What do you think, just now you mentioned the MSCI World Index and all this. Yeah, maybe you can talk more about this.
Yeah, so generally speaking, I don't like to specifically recommend products whether in a talk like this, okay, because sometimes we don't know what people buy, okay, and people buy because they think that we recommend them to buy, right? So, if you want to buy an index, if your choice is that of an index, the S&P 500 is good, right? I mean, if you invest in the equities market, you cannot avoid the US. right? If you look at the map of the stock market, the US stock market by market capitalization constitute about 55% of the world stock market.
I thought more than that.
It's about 54
Oh, really?
by
Wow.
market
Okay,
capitalization.
cool.
Right. The second biggest, and it's very far, right? It's like Japan, right? And that's like single digit, right? So if you are investing in equities, you cannot run away from the US stock market. And the S&P 500 is a very good proxy of the US stock market. So it's great, right? I mean, you have all the tech stocks there, and the big company, Tesla is also there if you like Tesla, right? So that's the S&P 500, but it's 100% US. So as I mentioned, if you want to be exposed, you want to be diversified, because as the saying goes, diversification is the only free lunch in investment. Then you will want to expose to the European stock market, you want to be exposed to the Japanese stock market, you may want to be exposed to the emerging markets. Then the MSCI All Country Index is a good one, right? Now, a good ETF,
MSCI World Index.
All Country, and Morgan Stanley Capital Index, right? All country lah. All country means like whole world lor, macam whole world.
How to buy?
Okay, so you can buy the ETF version, right? And I buy the version that is actually listed on the London Stock Exchange. The code or the ticker is VWRA.
VWRA. That
That is what I buy for myself. I never recommend.
I do it as stock. Okay, I buy his the one he sells. I mentioned. Yeah.
So that if you want an ETF that's exposed to a broader market than just the S&P 500, yeah, that's one consideration for you. I mean, the good thing about the ETF is that it tracks the index and the cost is low.
How low is low?
I don't know, it's point. I don't even track point. I can ask Keith, how low is low? 0.12, 0.15%, or even low. See, good. That's the good thing about having Keith over
so
here.
low.
Yeah, it's very bad. Okay,
very,
Keith will
very
shout
low.
across to me.
0.22%. Wow,
Yeah,
that's very, very low. Lower than 1%, really low already.
Yeah, so it's very low. As opposed to if you buy a very expensive actively managed unit trust, you buy an ILP, right? I mean, you could be paying like 1.8, 1.9%. Right, so the good thing about ETF, as you all know, is that the cost is low. And if you buy something that is low in cost in investment, you win already, because, right, the lower the cost, the higher the potential return to the investor. So that's the ETF. Now, of course, the other thing that I buy, right, for myself is I buy the dimensional funds. Right, we started the partnership with Dimensional since 2016. What is dimensional funds? Now, dimensional fund is very unique. Right, it's unique in that it is like an index, because if you buy one of their fund called a core equity fund, well, you have like, I don't know, 7,000-8,000 stocks inside there. So that's even bigger than the S&P 500. Bigger as in the S&P 500, you have 500 stocks. That fund has 8,000 over stocks. It's even more diversified. But what is different about the dimensional fund is that it is not an index, as in it doesn't just track the index. Dimensional believes that there are certain factors in a stock that can give you a higher expected returns, right? The three factors would be value stocks. Second will be small caps. The small cap is not like our Singapore kind of penny stock small one. It's very big, but it's still called small caps relative to the US market.
Yeah.
And then thirdly will be stocks that show a certain level of profitability. Now, you might be asking, well, don't other fund managers do the same thing? Well, they do. However, the way they implement it is very different. Other managers, when they decide whether a stock, for example, is a value stock, they use a lot of forecasting. They forecast the future earning of the stock. They guess what would be the discount rate. All these technical terms, right? I mean, it's very difficult to explain this over a live stream.
I also cannot understand.
Yeah, but dimensional don't. Okay, dimensional, the factors is being academically researched by this professor. If you are a finance student, you've heard of this professor because his name is called Eugene Farmer. He's a Nobel laureate, right? And he believes that market is efficient. Market is efficient doesn't mean you cannot find mispriced stocks. It just means that you cannot, it takes a lot of effort and money and time to find mispriced stocks. That the price of the stock quickly has already absorbed all the information in the market.
Your eyes must also see my YouTube.
Oh, okay. You do not know, there are 4 cameras here. Right, so basically, dimensional doesn't guess, right? The way they decide whether a stock is value or not is scientific, it's not by guessing. So it is good to buy. I have been invested in it. The cost is also very low. On average, it's about 0.3%, thereabout. So it's still very low. But a word of caution, and I don't really like to answer product question because they are just products. Dimensional has various products, right? They have got a product that is specifically focused on value stocks, right? They have a product that is more US based, more diversified. Products are like ingredients in the dish that you want to eat, right? How the dish is best cooked really depends on the proportion of the ingredients you
put
eat. Yeah. So I can tell you products, please do not just rush out there,
And chomp.
and just buy, all the products that we are
Like buy
talking
Chanel
about.
and buy Hermes.
Yeah, we're just
Sure.
telling you that these are some of the ingredients that I use, and when Lou shares the same thing, he's just sharing the ingredients that you use. What proportion should go into S&P? What proportion should go into MSCI World?
When do you eat the lunch?
It really depends on your own needs and your preferences.
Okay, cool. This one is an important question. First of all, I think someone asked, just now he mentioned about the MSCI World Index is VWRA. VWRA, that's the ticker tape on the London Stock Exchange, okay?
Yeah.
But the most important question just now is that your dimension fund 不容易买嘞.
Yeah.
How to buy? You only serve atas customer, not low class customer like us. So if people want to buy dimension fund, how to buy?
There are other advisors that carry dimensional funds, right? There are robo advisors out there. I'm sure all of you are aware. Money Hour carries dimensional funds, and Dowers carries dimensional funds. Yeah, so you can actually buy it over a robo. But again, I'm not here to endorse anyone. I just want to say this: a product is a product. When you use a robo, for example, it is really just an execution platform. You must know what you are buying, and you need to know whether how they put the combination in the portfolio is actually suitable for you. And after many years of experience, I can only tell you that it is not as simple as filling up 2 to 3 question kind of risk profile and deciding that a balance is suitable for me, aggressive is suitable for me. And the last thing I'm going to say about this is that it is easy to buy. And we can be doing this live stream many rounds. And it's very kind of Lou to do this many rounds, especially when the market goes down and we keep telling you, stay invested. I always say this: the head understands, the heart cannot connect. I can tell you that if you go on Montezuma's Revenge, which is a very scary roller coaster in Knott's Berry Farm in US, I can tell you that you will be safe. But when you're on the roller coaster, you wish there was a button you want to fly out, right? That's the thing. If you buy, and no matter what you say, the head and the heart cannot connect, and you jump out roller coaster, you're going to die. Right, you're going to lose money. Right? So if you are not
That's a good analogy. I never heard of this before.
If you are not going to be that kind that can sit still on a roller coaster,
then don't buy.
Or find someone to sit with you and to be able to hold your hand and tell you, don't jump, don't press the button. Okay? So yeah, that's the final word I have about buying your dimensional funds through digital platforms.
Okay, let me be explicitly clear. Okay, this man give something I wanted to say, I just cannot say it. Very important. Investment, I can, I've got, I don't know how many talk for 100. This is my 167 talk already.
You do more talks than me.
No, but yours is the atas one, mine is the LC one. But anyway, I can tell you what, this is the thing you do, you should do. But when it actually happened, like times like this right now, I see a lot of people writing to me, wow, Mr. Lu, what to do now, right? You must, know that if you want to invest, it's a roller coaster ride, like what Mr. Christopher Tan said, right? It's a roller coaster ride, okay? I can sit beside you, okay, in a roller coaster, tell you I die, but I cannot take away the fear from you. They go up and down, okay? So anyway, follow us on YouTube, okay? Follow us on YouTube. It's a 165 YouTube channel. Those 600 people, only 250 like, why you're so meow? Can you give more likes there or not? Walao,
we
dia tahan.
never look at this long because
Yeah.
this one very high lah.
Yeah, no, but if you sit with us, I will try my best to give you, as much as possible. I ride the ride with you. That's why you all should follow us, okay? And if you all have find some comfort now, okay, in not just this session and the previous session that I do, okay, give a blast of light, And if you find Chris now saying good things, the right thing you need to hear, also give me a blast of light, right? So I think it's incredible words of wisdom, okay?
I wanted to say something else for people who are maybe a bit older. Yeah. What do I mean by that, right? So if you are watching this and you are near retirement, and this is what we just told our clients this week, in fact, right? So if you are going to retire in the next 1 to 3 years, or if you need your funds in the next 1 to 3 years, and you have invested in the market, right? And the last, I don't know, since 2009, the markets has generally been on a bull run, right? Markets been generally doing very well, and the last 3 years has been great, right? Last year, I think the US market was like, the S&P 500, maybe 26% up, right? So you have actually made money. So if you look at what that you have accumulated, maybe it has really reached your goal. Maybe it is enough already. And if you need the money in the next 1 to 3 years, whether it is to send your kids for education or whether it is for your retirement, monies that you need the next 1 or 3 years, then maybe I'll say, maybe take a pause and ask yourself whether you want to take the money off from the table. Because I do not know, and none of us can tell you whether the next 1 or 3 years, whether the market is still going to be good, right? The market can be very tough for the next 1 year or so, right? And if you have already reached your goal, then let's be contented. Take it off the table so that when you need the money, you're not stressed that, wow, the market hasn't recovered, right? So for those of us who are near retirement, I ask you to maybe take a pause and consider this, right? Because we keep talking about staying invested, right? Sometimes we forget that there are some of you here watching this that might need the money in the short term, right? Then perhaps take a look at it and take it off the table.
Okay, cool. Okay, we're gonna start Q&A right now. Okay, I'm gonna start answering all your questions. You all can blast your question, but if we miss your question, you can repeat again. Okay, you can repeat again. And this is where, Chris, you got to go very fast in answering questions because the question come very fast and short answer, okay?
Yeah.
Yes. Let's start. Any recommendation to park emergency money?
Now, maybe SSB is a good option, right? Your Singapore savings bond, the yield is currently at about the May tranche is 2.53. So yeah, consider that as long as you can accept a 1 month liquidity, because you know that for SSB, if you want to sell it, well, sometimes you may have to wait up to 1 month to sell it. So SSB is a good option.
All right, SSB good option, Singapore savings bonds, okay?
Yeah.
Second question is, someone said that, hey, I think Wilson on YouTube said, if it drop by 10%, I buy, drop again by 10%. What do you think of this strategy?
That's fantastic, but that's provided we are very sure that, you'll keep on dropping 10%. Right, so I'll say don't be greedy. If it dropped 10%, well, just go and buy. If it goes up by another 5, well, it's still okay. Buy, because we don't know whether you'll keep dropping 10. We don't know.
Okay, very good. Mr. Lu, important question. Previously, you were saying that the war and China lockdown don't really bring down inflation. This is what I agree to. But in your own words, what do you reckon will bring down inflation? I'll let Chris answer this question.
Well, when demand drops, right? So when demand starts to drop, because when the government starts to increase interest rate and that curbs demand, and when the demand keeps dropping to a point whereby the price is low enough, then inflation will just there's no more inflation.
Yeah.
Right. So it's just a business cycle.
Mr. Tan and Mr. Lu, is it better to put cash in your CPF than use CPF to buy S&P 500, or use cash to buy S&P 500 straight away?
Well, we always try to invest using a source that is of a lower interest. So if you have your cash sitting in your bank account doing nothing, then use your cash to invest as long as it is above the emergency fund. Don't use your CPF, because your CPF is getting at least 2.5 to 3.5%. But if you really do not have cash, I understand, and you want to use your CPF OA to invest, you can. But please do not wipe out your OA. Please keep some buffer just in case recession, loss of job, you need to pay mortgage. At least you got some buffer to pay mortgage.
Very good. Okay. Someone asked, just now you say old, how old is old?
O means what? I mean, just now it's what?
Just now the
Oh, O,
if you are O already, you might think of your
I see.
investment time horizon.
Yeah, well, O is very general, it's very subjective, right? So when I say O, I really mean for people whom they are near retirement. So I do not know. I mean, some people at 45, they want to retire, right? Some people who are 60 and they want to retire. So, okay, maybe, I beg your pardon, maybe O is not the right word, but I'll say that if you need your funds in the next 1 to 3 years, whether it's for retirement, for sending your kids for education or that, then perhaps do a review and see whether you want to take money off the table.
Okay, cool. Crypto. What do you think of crypto? Do you have a bit of crypto in you, or do you agree that a person should have some crypto?
I have. I do have some crypto.
You have?
I have. What?
Wow.
Is it a sin?
No, just a surprise.
Yeah,
okay.
I have.
Usually, uncle do a crypto one.
Yeah, I want to be cool because I have a bit of crypto for 2 reasons. First reason is so that I can have a communication with my son. Right? If I tell my son that crypto is a scam, he doesn't want to talk to me again. Secondly, I want to understand crypto, and you understand best when you have some money in crypto. Now, the thing about crypto is that there are not enough evidence to show that it's going to give you a reliable return. Well, it seems to point to the future. It is very volatile. We know it is. Well, I'll say this, right? If you want to invest your money into for the purpose of very important objectives, you don't want to put into something that has not enough evidence to back it up. Right? I'll say don't use crypto as an instrument. Okay. Right? Because it has not enough evidence to back it up. But you just want to buy a bit to understand, and then you FOMO, you scared that suddenly you are wrong, or the thing really jumps sky high. You want to buy a bit just to experience it, that's fine. But please, really, really a small amount, an amount that you are able to lose.
How small is small? 5%? 1%?
Well, I'll say, in the past, I used to say that it is 5% of your total portfolio. I changed my mind because 100% of your money that is meant for serious objectives should not be in crypto, right? After you have put all your money, enough into those serious objectives that cannot fail, and you got some spare, then I'll say, okay, try it out.
Someone say I bought a United and Emerging Market bond at 1.4 plus now 0.9 plus. Should I still hold or sell?
Well, I cannot answer this question.
Yeah, that's very tough, right? Yeah. Can you explain why you can answer this question?
I do not know the basis. Why do you buy it? For example, if you have bought this as part of your portfolio, it's supposed to play a role. And even if it drops, just because it drops, well, you can still hold it. I do not know how the bond has performed. What's the track record? Maybe the track record has always been good, but it just has fallen. So I think it's very difficult to answer this question.
A lot of people here, 你在信息 bond, 你在价不在价, that kind of thing. Can we treat our CPF like a bond?
Well, I don't like to treat it as a bond because the prices doesn't fluctuate at all. I mean, the whole purpose of bond in the portfolio is actually to moderate the fluctuation.
Hey, he said exactly the same as me. Yeah, wow, so the same. Yeah, I'm so proud, and now got people experts say the same as me.
So if you go to USS and you like the trail and you can take the trail, you can go and take Battlestar Galactica because it's like 100% equity portfolio, right? It fluctuates like crazy. But if you cannot sit still in Battlestar Galactica and you will press a button and jump out, then perhaps go for an easier roller coaster that is a Puss in Boots roller coaster in USS. That is it's quite scary.
Is it?
Yeah, for our age, it's still quite scary.
No lah.
Okay, maybe I do that. Yeah, so that is like putting a bit of bond into your portfolio. It makes the volatility lesser, right? So that's the purpose of bonds. So when generally in the long term, when equity price fall, bonds is able to maybe up a bit to hold it, but your CPF doesn't really work that way. So I will not treat my CPF like a bond.
So Christopher, do you invest in individual stocks or you only have funds?
Yeah, I got Singtel. That was free one they gave me.
Oh, that's different. That's different. You hold for so long now.
No.
Well, that shows how old you are, man.
Yeah.
Okay.
It's too small to sell.
Yeah.
Okay, but well, joke aside, I don't buy individual stocks because I do not know which stock to buy. I have no time to go and read it. I have no time to attend AGM. When I attend AGM, when the CEO tell me how bullish the company is, I don't know whether to trust the CEO or not, right? So forget it. So I don't buy individual stocks. All my investments in terms of equities is in index as well as dimensional.
See, I told you, right? Even experts like him, now his expert level is like 10 times mine, right? also don't stock pick. Yeah, let alone all of us.
I mean, if the market is going to give you enough return, I mean, there are people who say that, I mean, over the last few years, if you go on Sidley, if you go on all the Facebook, you will hear of some people that will, that will boast about, my this fund go up 20%, I can beat the S&P 500, and all that. Those are good times. The thing is this, if you are not greedy and the market is able to give you enough returns reliably, why take the risk to go and buy single stock, go and use those actively managed funds that can potentially be better but may not be so reliable? Right? So it's all about contentment, really.
Okay, cool. Again, sorry, I can nag. 650 of you all in YouTube, only half of you all give a like. Can you please log in and give a like, okay? Give me some face, give Christopher Tan some face, yeah, please. Okay, what do you think of Hong Kong and China ETFs?
What do you mean by Hong Kong? I think tracking the Hong Kong index.
That means buy China and Hong Kong ETFs.
I mean, for me, I prefer to be more diversified and buy an emerging market ETF,
Sure.
right? Instead of being so narrowly focused, or like we have shared just now, you buy the all country index, the whole entire emerging market is already there. So one ETF, don't have to really go and like buy a few, very efficient, solve all your problems. Okay. Unless you have a position, unless you want to take a position that I really, really like China, I really like Hong Kong, I think it's going to be the superstar, then okay, then you take a position. But that's not my position.
What about REITs?
What
REITs, yeah, good not?
What
stable source of income? REITs.
Stock good.
But the specific question is REITs.
Yeah, so that's my answer.
Oh, okay. Yeah. Okay, expand that a bit.
Yeah, so it's a very difficult answer to give as well. No? So because sometimes when you ask people, right, is REITs good, right? I mean, yes, it's good. It's a good product. It gives you income and you buy the correct REITs, it's good. But what role do you want it to play in your portfolio, right? If you are still accumulating and you are a growth or rather an investor that wants to reinvest the dividends and all that, then maybe you don't need to buy REITs. Right? But if you are an investor who believes in income investing, dividend investing, then REITs is great. But if you buy REITs, again, you are very concentrated into just one sector. Are you prepared to take that concentration risk? Because once you concentrate, you've got to accept the volatility, right? Yeah, so it's a very difficult question to answer. As a product, yes.
Some REITs can conquer Kiawan.
Yeah, so I was joking with Blue Line. So it's salt good, right? If you're asking somebody, is salt good, sugar good, right?
Yeah.
The answer is yeah, it's good, but do you need it in the first place for your dish?
Yeah. Okay. Cool. Okay. There's some question on. Okay, I actually like a bit of Nasdaq. What do you think of Nasdaq? Someone's asking a question.
Well, it's a growth stock. It's tech. If you have a great belief in tech and you want to put some money into it, I have no objections, because at least you are not buying the individual stocks, you are not buying the individual Microsoft, and all that. And if you do not know which stocks will do well, then buying the index is fine. So I think that's fine. I know you're a believer of Nasdaq. Maybe you should say something.
Well, as I said, as I always believe in, you first form your safety net with CPF first. The one, okay. I think even Mr. Christopher Tan also will believe in that. Okay. Yeah. Then after that, I layer with S&P 500, layer with Nasdaq. Gao liao. Most of us, and by the way, I do have Dimension Fund. Okay, that's before he realized that he thought I was very rich and accepted me as a client. Okay, so I bought Dimension Fund from him. Okay, or he will kick me to money hour, that kind of
rubbish.
Yeah. So anyway, but I do have some Dimension Fund with him. Okay, but I like globally diversified index. Actually, I always say to use the word it's a globally diversified index. Okay, but I think just do this enough already. You don't need to worry about too much things. Crypto REITs all these kind of things. Someone asked about. Okay, see, let me just read a very small. You mentioned multi-dimension fund.
Dimensional fund.
Which multi-dimension fund would you recommend? The potential return better than S&P 500?
Well, it's very difficult for me to specifically recommend you which dimensional fund, because like I say, it depends on what kind of combination you want, right? Because, I mean, there is a dimensional fund that is very diversified across the US stocks, but if you want to take a bigger position, in value stocks, then they have another dimensional fund. It's called targeted value that focuses on value stock. But what proportion to put into each one, it's very hard to say because it depends on your risk appetite as well. And does it potentially return better than S&P 500? The thing is this. The thing is that if dimensional fund is correct, okay, if dimensional fund does a great job, it should be slightly better than S&P 500, right? 1-2% more. But well, if dimensional fund underperforms, then it should be slightly lower than the index. The thing about ETF is not every one of us like to trade ETF on the stock exchange, right? And buying dimensional fund is a lot easier than buying ETF.
Yeah, the two comments are quite funny.
Yeah.
Maybe not so funny, it's tragic.
Okay.
Someone said, I bought Luna, face pump.
Almost zero already.
Yeah, it's as good as zero.
Yeah.
I yesterday called someone who worked in Luna, the company.
Yeah, I got Terra.
You got Terra?
I got the stable coin.
Also,
Zero, almost zero.
almost zero. Okay. So today I gotta buy him dinner. Yeah, poor guy.
But small money,
Okay.
small money.
But really, and by the way, this risk not just happen in crypto. Some stocks can also have existential risk like that. That's why stock picking is very dangerous. I say many times, if you buy this broad-based index, at most you get volatility risk. You know your roller coaster will go up and down, circle. So one day it will come down and bring you back to safety. So, but you go and pick this kind of stock, you get this kind of roller coaster plus can flung out of the chair. Why you need this kind of thing, right?
Yeah.
So I speak too loud again. Okay. So please, if you can, even expert like this say the same thing as me. Okay. The second. Chris is great. Luna zero. He also laughing like a kid. That's like this guy.
Small money, that one small money.
Yeah,
That's
okay.
why, I mean, that's why I say that if you want to put into crypto, it must be money that you are willing to lose, right? So for me, it's no big deal. It's a small amount. I'm buying to learn. It's fine.
These people talk like that.
What about coin?
Okay. Anyway, there's a lot of questions. Okay, just let you know, we'll try to rush through the questions. A lot of questions coming in. I already told him he have no question. No worry, we'll go on to 6 p.m. But I want to dedicate after this another 10 minutes of question answer. I want to dedicate the session into a more important session on this topic of how does a rich become rich. Because Mr. Tan's firm serve only the rich, okay, and he meet sibei zui wului lang. So I want to learn how to become rich, even richer from Mr. Tan. Okay, so maybe I segue to the topic by someone asked a very interesting question. Mr. Tan, what's our net worth need to be before we can become your client? He laughed. He said, Mr. Louis guy.
I don't know how to answer this question. Yeah, but
someone asked you this as well.
Okay, generally, we are a fee-only firm. Okay, a fee-only firm means that when our clients come to take advice, they pay us a fee for advice. And it's not that we look down on people who may not have so much funds, but it is not worth your paying us a fee when your financial situation is very simple, right? All you need to do is attend talks like this. Actually, you roughly know what to do. You don't have to pay me the fee, right? Now, generally, we will say that people whom, it's worth their time and worth their money paying us the fee to do the work, generally are people who are high income earner. As a family, well, the household income will be in the region of about 500,000, 600,000. Okay, to start, they usually start with about $500,000 with the aspiration of accumulating to $1 million in the next 4 to 5 years, right? Or for the retiree, okay, the retiree should at least be prepared to start with about $1 million. Then it makes sense for them to actually pay us a fee to do the work. Yeah. Now, I hope that's not discouraging because we are all given different lot in life, right? And it doesn't matter whether we have 1 million or $500,000, it's still a lot of money. But if you have lesser, I can assure you, you have lesser complexity. Okay, you are not like Mr. Lu lose his hair because he got a lot of money, so a lot of complexity.
This one, whether I rich or poor, this one all gone. No fertilizer.
So it's a good thing. So you just have to, listen to what we really, I mean, don't forget, I saw some of the questions, thematic funds, thematic ETFs and all that. Life really doesn't have to be so complicated.
Don't be so cheap.
Really, if you just keep it simple, maybe a lot of financial advisors will be out of job. Yeah, because it's actually really simple. If you are contented with 6-7% a year, it is not actually difficult to achieve by doing just what we have been sharing.
Yeah. No, I think that's wisdom, right? It's wisdom. Actually, just to know how to manage funds at a basic, even intermediate level, okay. Most of the time, we all can do it ourselves already. Yeah, just learn to do that three thing I share everybody already, right? First, form a CPF layer.
Yeah.
Then S&P 500. Maybe a little bit more on Nasdaq. You can don't do Nasdaq. Just these two, you can go and enjoy your life. You can pursue a passion and everything.
Yeah, I mean,
already.
if you look at CPF, 4 to 5% guaranteed, right? I mean, you don't even have to consider buying any insurance product. I mean, no insurance product can beat that, right? 4 to 5%. And if you start as early as possible, top it to the max, well, you will have a sizable amount. And then if you invest in simple things, I'm quite sure, to reach $1 million, $2 million, it's not a problem when you retire.
Yeah. Okay. Good. So you all agree, Agree, give lightly. Give light. You don't be like monologue like that, Can tolong you not? Close to 1,000 of you all here, never, like something like that. Yes, thank you. Okay. So I always ask for love, Actually, Facebook, Danielle, the people.
Facebook or YouTube?
YouTube. Yeah. Facebook always very active with loved one. Yeah, and okay. All right, cool. Okay. So I'm gonna segue into a get rich part now. The stock market part, all this, even missed it. Okay, don't worry. Okay, we can come back to question later. Even missed it. I think looks like what he has shared now is what I have shared so far. So I think I can answer 80% of the question that he can answer. The remaining 20% I'll never be. Even if I don't know how to answer, I'll go back and ask him. Okay. Yes. So let me ask a very important question about this. Okay. So Chris, you have your client all atas one, Yeah, right. You don't serve non-atas client. I will say me as his client was a mistake. Yeah, he only found out later, but never mind. Okay. But he served really atas, rich. Okay. So he has seen a lot of rich people plus himself rich. Okay. He has to be rich because this office here very rich. Okay.
Grandmama.
Yeah. So. Hey, hello. A lot of people here have private conversation with Keith. Yeah, I know Keith is. By the way, Keith is investment mode founder. Very smart.
Ask Keith come.
Yeah. You have private conversation, which is fine. Okay. Just want to say that this office today high powered now. We got many smart people. Okay. So anyway, sorry, I distracted. Yes. Can you give some lessons, high level lessons first, on what are some of the virtues you see from the rich that you serve? Okay, and then how many rich people do you all like clients that we all have ballpark you have seen, and what are some of the key virtues you have seen that we like to share with everybody?
It's very simple actually. Your head come inside and look at the camera, and like that.
Number one, cannot have hair. Okay. Yeah, number one, cannot have hair. Okay, anyway, sorry.
They look like Mr. Lu, they dress like Mr. Lu, they drive like Mr. Lu. So basically, the people that we serve, and I realized that the really rich ones, not the fake ones, not the one that look rich, but the really wealthy ones, they are generally very nice. And I mean, not the arrogant kind. The real rich are not arrogant, right? They are humble. And when I say humble, it's not just in their posture, it's also in their dressing, right? It's also in the kind of lifestyle they choose to live. Now, I can answer another question later on. Now, it doesn't mean that if you stay in a landed property or a condo or you carry a LV bag, you're not humble. No, I don't mean that at all. Yeah. So the second thing is they're humble in the way they carry themselves, their posture, how they dress. But I think the most important thing is I realized that the real rich that we serve, and we're talking about people who multi-million dollars. In fact, last week I just spoke to someone, a quick estimate, this person is probably close to 100 million. You will never expect that this guy is so rich because he doesn't dress like he doesn't talk.
Carry
like that.
NTUC plastic bag. I ever kena one before.
And they are very contented. Yeah. So general virtues,
Very humble.
nice.
Yeah.
They treat people people nicely.
Can you speak a little bit louder?
Oh, now you're too soft. You're too loud. I too soft.
I
Problem.
too loud. Yeah.
Yeah, and a couple of weeks ago, in fact, I did an interview with Mr. Philip Ng. If you do not know Mr.
Wow,
Philip Ng,
Mr. Philip Ng.
yeah, that's the CEO of Far East Organization.
Newton Fong San.
Yeah, Newton Fong San. So you know, like Fullerton Hotel, you know all that, right? That's owned by him, right? He is now, I think, because a lot of Chinese businessmen came, he was once the richest man in Singapore, but you know all these Chinese men came in, and
Now top 5, top 10.
top 5. He's top 5,
Yeah.
right? And of course, everybody recognizes him. But if you talk to him and if you don't know who this guy is and he walk on the street, you will not realize that he's a billionaire, right? He treats people with respect, with honor. I have seen him speak to cleaners before with my own eyes, right? I've spoken, I mean, from afar, I saw him speaking to cleaner, give respect. So these are the general virtues. Yeah.
Very good. Yeah. Okay. So maybe you can share a little bit on what is the average lifestyle of these people. What car do they drive, or is there even a typical stereotype? What house do they stay in? What food do they eat?
Yeah.
You know, brands do they carry or whatever?
Yeah. Thanks for that question. Right. So I don't want us to have this stereotype idea that if you carry an LV bag, it means you are not prudent. If you drive a Mercedes Benz, it means that you are not prudent. If you stay in the GCB, why you are not prudent? It's not that, right? Because it is all about how much you have, right? If you are a billionaire and if you are staying in a condominium, look, come on, is that too much? Right? If you're a billionaire and if you drive a Mercedes-Benz E200, no, that's not. That's
If
not
I
too
become
much, right?
millionaire, I'll move out my HDB.
Yeah, and there's nothing wrong. So the key here is that this lifestyle of the rich or the real rich, right? They know how to live below their means. Right?
That's the key.
Okay, now so we are very used to the idea of living within your means. But I want to introduce this idea of living below your means. Right? Living above your means, everybody knows. That's a no-go. Living within your means you earn $1. If you spend $1, you live within your means, right? But living below your means you earn $1, you can spend $1, but you choose not to spend $1. You can actually drive a Mercedes, but you don't want to drive a Mercedes.
You really need to speak even
Louder.
Yeah.
Maybe I
Okay.
go nearer.
Yeah.
Yeah. So with that as the basic principle, right? With that as the basic principle, then it's really not about the bags you carry, the car you drive, the shirt you wear, the house you stay. Because as long as you know that you are living below your means, you are fine, right? So I think that is a very important point that we need to make. But because otherwise, you know, every time we see people carrying a branded bag, drive a big car, stay in a house, we think that, oh, these people pretend or show off lah, you know, not prudent lah, you know, and all that. It may not be true because this person just has a lot, but he has chosen to actually live even a simpler life, and yeah, we think he is.
Okay.
Yeah.
In case everybody, just now I talk about.
Carry any bag.
Okay. Yeah, just now I talk about staying private. I know I say HDB, and a lot of people know I say HDB. Yeah. I do have a dream private house. Okay. My dream private house, I've said this before, is a house beside the sea. I can throw a fishing line down.
Yeah.
Because the aim is the fishing, not the house. From the window I open, I throw a fishing line out. Okay. And then I put a bell there and a fishing line and go to sleep. At night, the fish come out. I quickly go and catch the fish. Okay. The problem is this kind of house in Singapore, I don't know where to find. Okay, but I think if I have $1 billion, I might build my own island and.
Batam.
No, Batam.
Batam 30 minutes only.
Is it okay? But I'm just telling you that yes, that's why I need $1 billion. Okay, yes. But by the way, my wife already declared that you 自己去住 this kind of place. Yeah, all the seawater spoil her skin and all this kind of thing. Yeah, Sentosa Cove I checked before already.
Oh, it's very expensive.
It's not just very expensive. They don't allow fishing. Mother. Then even that still wanted to go because I would fish illegally. I got arrested once already. I got arrested once for illegal fishing. Okay. But then I found from all the fishermen around the area, that place got no fish. Yeah. Anyway, sorry. So no point, okay? Yeah. So maybe you can share. Now you talk to the very good insight, okay? How does most of people become rich, or is there a formula that you found? No, is there one fixed formula, or there's certain secret sauce that are common, right?
There's no secret. It's actually very simple. The rich, it all starts with income. It always starts with income, right? And of course, if you're an employee, it's from your employed income. If you're a business owner, it also comes from your business income, right? The key is always income, because the higher the income that you have, the higher the propensity to save. You cannot run away with that, right? So if you really want to be rich, you got to be very good at what you do. If you are very good at what you do, you naturally will be compensated well. And you always have to stay relevant, because you can be very good at what you do. If you don't stay relevant, you will be out of fashion, right? So if you can do these two things well, you earn a good income, then you have a higher propensity to save. But as the saying goes, it is not how much you earn that makes you rich. It is also how much you save, right? So then it's expenses. Again, it's about cutting down expenses, about living below your means. And with the surplus, what do you do with the surplus, right? If you keep the surplus in the bank account, then naturally you cannot be rich. So you have to invest this surplus. So there's no secret sauce. It's really very simple, but the difficulty is in the implementation. How many of us continue to stay relevant until today? How many of us give our very best at our work so that we earn a good compensation? How many of us, as our income goes up, our spending doesn't go up in tandem? How many of us has the discipline of keeping to a budget? So it's easy. The formula is not difficult. We can say this many times, but it is the discipline execution that makes it difficult.
I think that's very wise. I used to think that the secret is to be able to buy low and sell high, be able to become a tech entrepreneur or whatever, right? How many of your clients are this kind of startup create a startup and after IPO and sell?
Very few.
Yeah.
Very, very
What's
few.
the typical profile of your client that are rich?
Yeah, so most of the clients that we serve, by the time they come to us, they are usually in their late 40s or in their 50s.
Like me, no hair.
Right, so they are very senior, right? They have done very well in their career, they have accumulated some money, they earn a good income, or they are very near retirement. So typically we see this kind of clients. Of course, we have some, it's really an outlier, right? We have clients who are very young. When I say very young, means maybe in the mid-30s. We have one client who actually had a startup in the US, okay, and it was sold already. And so when he came back, he had millions of dollars to, to invest. But it's an outlier.
Rare.
Most of the time, don't think of, if we think of like, oh, I want to do that, well, there are only a very small number of people who can successfully do that. Yeah.
Yeah, I think that's very important, which means that the chances of us pursuing a normal life and become rich is very possible.
Yeah, it's highly possible.
It's very possible, right? This is now really someone who's not just a co-lion, but he has seen all his clients do it.
I mean, most of our clients are employed people, right? They are employees. They have just done very well in their career, earn a good income, and that's it.
Okay. Again, YouTube, more likes, please. Okay. Yeah, the more likes it is, more people can get to see this video, right? So I think it's very important. So, someone, a lot of people ask me this question, Mr. Lu, I no money now, how to become rich? How to answer this question?
Yeah, I think the first thing, and this is a very serious topic actually, because the first thing you got to ask yourself is, what is your definition of being rich? Right? Is your definition of being rich 20 million, 10 million, and all that? Because if that is your definition, honestly, not many people can reach there. How many people in Singapore has got 20, 30 million? Very few. The top 0.5% maybe. And what are your chances of being that top 0.5%? We've got to be very realistic with ourselves, right? So first of all, I think we need to sit down and define what does rich means. And I'm going to offer you a totally not quantitative definition. And I've actually shared that with a lot of people. Okay, my definition of being rich is about living the good life. And Lou, when I did the interview with you, I asked you this question as well, right? So what is living the good life? And this definition is not from me, it's actually from these two authors, Richard Leder and David Shapiro. They wrote a book called Repacking Your Bags. And in that book, they define the good life. Listen, they define the good life as living at the place you belong, with the people you love, doing the right thing on purpose. If you are able to live in the place you belong, and you could ask yourself, where is the place I belong? It could be here, it could be overseas. With the people you love, obviously your families, doing the right work. What is the right work you're doing? And I'm sure Lou will say that all the work that he's doing right now, which is not business, I mean the work that he's doing right now is the right work. He enjoys it. It's passionate for him. It's passion for him because he loves to educate all of you. He's doing the right work and it's intentional, on purpose. I know he's flying off tomorrow, right? A lot of things to pack, but he's here because it's the right work and it's on purpose. Now, if you are able to do these four things, you live the good life, you are rich. Now, once you define that carefully, you sit down, you define that carefully, then you rearrange your financial affairs to support for you to do that. And it's not always about accumulating. Sometimes it's about decluttering, right? So if you define it, for some of you, maybe you can do that today. If you start to declutter, and you do your budget and you realize that actually you don't need so much to live the good life, then actually you are rich already. Now, for those of us who still need to accumulate, your definition of the good life needs you to accumulate, and you may not have money now. I'll say start somewhere. If you keep sitting down there and say, I tell you, when I first started Providend 20 years ago, I had no money. I had no money. The business was tough. As a fee-only firm, not taking commissions, the first 3 years was tough. On the third year, we almost went bankrupt. And no money. I told him very little pay.
That was September 11.
2001 onwards.
You pick a right year, the most sway year to start.
It was very tough. I was like, and some of you will know that prior to that, I was a pretty good insurance advisor. I was earning quite a good amount of money. And then suddenly when I started Providend, I was bringing home like on average maybe $1,000 a month. And I understand the psyche of when you have no money, because when you have no money, you don't feel like investing, because firstly, you don't have enough to eat. Secondly, you feel like when I put $50 into anything, it doesn't make a difference at all. I might just spend and enjoy life. But I realized I was wrong. And so I'm going to tell you, even if you put in $50 today, even if you start with $100 today, you are starting, right? And do that, because more and more as you see your money growing, you get more and more excited about putting in more money. Because when you have nothing, you have no excitement, right? But once you put in money and you see your money growing, then you start to put in the money. So start somewhere. But please do consider the definition of the good life. That is the starting point of becoming rich.
That is so good a definition, right? Yeah, we always see, right, a lot of rich people, get into issues with siblings, with family and things like that, and then lawsuit and those kind of thing, right? Not all like that, I'm just saying, right? But I think he clearly defined something very good, right? So, for example, this period I'm back in Singapore, I spent so much time with my kids. Slide this way, careful. Yes, slide this way, and I just enjoy this time, right? Yes, so I can read. Are you Christian? Yes, he Christian. Yes,
You
I also Christian. Yeah, he good Christian. Yes.
You-
So I try to be good Christian. Yeah, but okay. Anyway, that's a separate topic. Okay, cool. Yeah. So I think it's very good. Yes. So I think it is really very good. Okay, so I'm going to spend the next half an hour answering Q&A questions again. Okay, but we have got two big themes that we answered, right? Number one, in this market, how to remain how to survive and how to remain calm and how to do well. The second thing is how do we become rich? Borrowing is experience, right? Great topic, right? So fire off all your questions right now. Those in YouTube and Facebook, give a huge blast of light so that more people can see it. And now let's fire off all your questions again. Okay, I missed quite a few questions coming in. Any views on endowment?
Well, endowment is not a toxic product. It's not a bad product. However, if you want to make use of endowment to grow your wealth, to accumulate money, then you may need a lot of money to do that, because insurance is not a good instrument for accumulation. The returns are just too low, right? So, but it's not a bad product, as in if you really don't like risk, you don't like volatility, and you only have $50, $100 to save, and it's very difficult for you to invest, and you like the regularity of saving money, I would say it's better than not doing anything. But if you have a choice and you understand investment, insurance is a terrible product to use for accumulation.
Last time Money Hour see also same thing. Now Chris Tan also say same thing. Those people, from the insurance industry 不是我讲而已是他们讲yes. Is USD in Singapore brokerage subjected to estate duties?
Is USD in Singapore brokerage subject to
estate duties?
Well, when it comes to the item of estate duty, right, it all depends on your country of domicile, right? You are talking about investing in US assets, then yes, potentially you may be subject to US estate duty. But if you are talking about US dollar in a Singapore bank, then it's not subject to estate duty, because if you are Singapore domicile, there is no estate duty in Singapore. So I'm not sure what specifically are you referring to.
Okay, should we put in more money into CPF or hold cash since interest rate outside is rising? Example, Singapore saving bonds.
Yeah. Well, many answers to this. If you have cash and you are not doing anything with your cash and you don't want to invest, then obviously topping up your CPF is a good idea, right? And even if you have got something to do with your cash and you feel like you want to top up into your special account because your special account still have got some way more to go, then I'll say, yes, please do that. But don't overdo it, okay? Because putting money in CPF is like joining secret society. Very easy to go in, cannot come out, right? It's an irreversible decision. It's like 参加黑社会, right? You go in, easy to join, difficult to come out. So if you're so excited to put everything in, then if you lose your job and no income, you are gone, you got no liquidity, right? Now, however, if after doing all that, you still have got cash and you have got investment opportunities, then perhaps invest it, because there is a possibility that you beat the 2.5%.
I never see people say CPF, put cash money in CPF like joining his survey before.
That's what I told Chin.
Is it? Yeah. I never hear people say this. Okay, yeah. I thought that was quite funny. Okay. Someone asked a question about ILP. Is ILP insurance better than endowment?
Wow, this one very sensitive, right?
Mr. Lu say, ILP, really bad, bad. Try not to do ILP.
Well, generally speaking, I mean, we don't carry ILP at Providend. Since 20 years ago, we have always been saying that there are better choices out there than ILP. I mean, let's not talk about performance and all that. I mean, why do you tie your hands and limit yourself to that few funds that are distributed by the insurance companies when you have got many other options out there, right? And plus, generally speaking, ILPs, insurance products, the cost is high. We don't like it when investment cost is high, because the higher the cost, it eats into your returns. So, well, I'll say you don't have to depend on ILPs. There are options out there. We don't carry ILP at all for our clients.
Very good. Sorry, just a secret society comment. I think a lot of you all
angry me.
No, they bastardized what you said.
Oh.
He said putting cash into CPF
Ah.
is like joining society. It doesn't mean that when you move OA to SA,
yeah.
that is not quite the same. It's not quite the same.
I'm saying because that viewer was saying, right,
Sure.
should I put cash into CPF, right?
Yes.
I say yes, you can, but you just have to accept it's irreversible, because you
Yeah.
put in, you very difficult to take out.
So even Mr. Lu cautioned many times that you really want to put cash is a very cash as a law alternative, right? So what you should do is work very hard. If possible, work 2 jobs, 2 double stream of income going into CPF. Takai mua, that's the best. Okay. Is it necessary to have a term insurance in this scenario? Let's say term insurance coverage 200k, but someone really a 200k worth of asset.
Well, the purpose of insurance is to replace loss of income, right? So if you want to replace your loss of income until you retire or until you have no more dependents, whichever is later, and the amount of asset you need is more than 200,000, then you need to buy more insurance. I'm not sure whether I make sense or not, right? This morning I was just seeing someone, and this person needs to replace his income upon his death. He needs to replace about 48,000, so let's say 50,000. And the kids are very young, and so he needs to replace for at least another 20 years. So 50,000 times 20 years is $1 million. So if he needs a capital sum of $1 million to replace his income, and the only asset he has is 200,000, then obviously there is a gap of 800,000.
Okay. Someone will give you affirmation. Thank you, Mr. Tan. I watched you. Okay. I watched you on the talks on insurance before and helped tremendously. Thank you for selfless sharing, and thank you, Mr. Lu, for bringing these good people in your life.
Yeah.
I
Thank you.
bring good, good deals and good people in your lives. Okay. Yeah. Okay. Anyway, by the way, I don't bring Simi Ako Amau into this channel. Right.
So fast, man.
Okay, it's very fast, so I cannot catch up. Really, only good people whom I think will add value to the channel. We invite them. Okay. You gotta thank B for allowing us to use your premium more channel as well. Right. We hope that all this, I mean, there's no point just selling backs. Right. Really want to make sure you guys do well in your life also. Okay. My hubby has hit the CPF FRS and will be 55 years in 3 years' time. Is it okay to continue cash top up since he can withdraw them in a few years' time?
But he can't, right? Unfortunately, he can't because he has already hit the FRS. So once your special account has hit the full retirement sum and currently it's 192,000, unfortunately, even if you want to top up, you cannot top up anymore. Housing
voluntary,
refund. Yeah. So the only thing is you can do the housing refund scheme, but that doesn't go to your special account. That goes into your ordinary account.
Yes.
If you want to top up some more, wait 3 more years until he turns 55, then he has an RA, then he can top up until the ERS, the prevailing ERS at that point in time. Okay, so I hope that's clear.
Okay. Recently I bought a new term insurance with CI riders for my daughter and terminate her life insurance plan. Did I do it right?
I don't know. Yeah, I don't know because it really depends on why you buy it for. But generally speaking, for children, they don't really need a lot of life insurance. Okay, the one insurance that all our children need is a hospitalization plan, the integrated shield plan. That's what they must have. And then if you really want to, yes, you buy a critical illness plan for them. Okay, so that in the unfortunate situation whereby they get into a critical illness, that amount of money can be used for 2 things. One, it can be used for them to pay for things that are not covered by the hospital plan, because sometimes not everything is paid by the hospital plan. The other option with that is that sometimes for young kids, the parents want to stop work to take care of the kids full time. That lump sum can be used to replace the income loss, right? So in short, H&S for kids, if you really want to buy a small amount meaning to say like maybe 100,000 or 150,000 critical illness plan on the kid's life, and that's really about it. I know parents have to buy a whole life plan for their children. If you think about it, it's not a priority, right? If something happens to our children, they are not earning an income. There's no need to replace the loss of income, right? So when we plan, there is a priority of needs. Children to buy whole life is definitely not top priority.
Correct. Okay. So Pauline has a question. I bought my whole life early care and advanced early stage critical illness 2 years ago. Now I've cancelled the early CI riders. Since I have no coverage in early CI, do you think I should put back my early CI riders in my whole life, or I should get a multi-stage CI? I'm mid-40s.
Yeah, so early CI means it pays when you are even stage 1, not serious. Multi-pay means that, well, if someone gets early stage, it pays one time, and then subsequently, if he gets cancer, it pays the second
Sure.
time, right? Now, it really depends on your needs and affordability of premium. But I'll just say this, right, Pauline? I don't feel comfortable that you cancel a CI plan without a CI plan, especially if that is the purpose of replacing your income. If you are critically ill, you need to be hospitalized, you lose your income, you really need a CI plan to replace that loss of income. Now, whether early CI, multi-pay CI is a separate matter, but I strongly encourage you, please look at getting a CI plan to replace loss of income in the event you are critically ill.
Okay, cool. My banker told me, by Sunrise, my banker told me a CPF Life breaks even only when I'm 80 years old. Is she correct?
What does it mean by break even?
That means you will loogie money and make money only after 80 years old.
You will never rugi in a way.
Yeah.
If you die too soon, then your family gets whatever unused amount. If you live too long, then you win because you will get more than what you actually set aside. So don't listen to your banker.
Yeah, that banker ought to be slapped. Okay. Yes. Okay. Your explanation of CI incorrect. Okay.
Which one? Which one is incorrect?
I don't know which part is incorrect.
Yeah.
Okay. Okay. What? Piang so fast. Okay. As employee, we are covered by organization group in medical insurance. Am I right to say that we only need to sign up for more medical insurance only if we feel that the medical insurance for a company is not enough?
Yeah, so don't depend on your organization insurance because if you leave the organization, then you're no longer covered. And if your health change, you cannot buy a new one. So I'll say treat your organization insurance as a bonus. Yeah, don't depend on it because one day you're going to retire, one day you may resign, and if your health change, then you can't buy anymore.
Okay. From Instagram, hi Chris, can you talk about ElderShield to about ElderShield to Wapiang? From ElderShield to CareShield, what about it? I had ElderShield and received an email that you will change to CareShield. I have no idea what is it. Is it bad? I also don't know what is that.
Yeah, so ElderShield, okay, is the older severe disability plan, right? And in the past, ElderShield is only given to you, or they invite you to participate in ElderShield when you are 40 years old, right? Now, in the event of a severe disability, defined as if you cannot perform 3 out of 6 of the activities of daily living, depend on whether you are ElderShield 300 or ElderShield 400, right? They pay an amount for about 5 to 6 years. The older one pay for 5 years, 300 per month for 5 years, and the newer one $400 for 6 years, right? And obviously that is not enough. So the government, MOH, came out with an upgraded version called CareShield Life, right? So CareShield Life, the payout is more. It started at about $600. Now I think it's just slightly above 600, right? And they are now offering it to people who are 30 years old, right? So if a person hits 30, automatically this person gets CareShield Life. Last time for us, ElderShield, 40, they invite. We can still say we don't want. Now, for those, if I remember correctly, born between 1970 to 1979, this year when you reach your I don't know which birthday, but they automatically invite you to cross over to CareShield Life. It just means better coverage, but of course the premium is slightly higher, right? Now, automatically crossover means, well, your ElderShield is terminated, you're on CareShield Life, but if you really want your ElderShield, you can actually sort of like reverse it, right? The message that you receive from the SMS would tell you how you can reverse that decision. But I'll say CareShield Life definitely covers you more. And if you can afford it, which is not too expensive, your Medisave should be able to pay the premiums, I'll say stick to CareShield Life. Yeah.
Okay. What is the title of the book that you got defining the rich from?
Repacking Your Bags. Repacking Your Bags. Richard Leder, Leider, and David Shapiro, Shapiro.
Wapiang. Okay. That's okay. So someone asking the question just now. Nasdaq and S&P are heavily weighted on tech. Okay. Shouldn't we not put everything into one basket?
You want to talk about this?
Okay. S&P 500. Yes, there's a big tech, but there is a huge segment of it is non-tech as well. So I consider S&P 500 because 500 companies pretty well spread out, okay? But that's my view. And also those probably US registered company, but they're quite global companies. So I'm quite, yeah, but NASDAQ is really tech, okay? So therefore, for myself, I didn't say you are, myself, I'll try to put more on S&P 500, a lot less on NASDAQ. Your view?
No, it's the same. It's the same. Yeah, I mean, the S&P 500 is not just focused on tech. It is based on the market capitalization, right? And if they meet the market capitalization requirement, it just goes to S&P. So it can be any company, not just tech companies.
Yeah. Okay. Let me shoot. NASDAQ versus TQQQ. I think you are saying QQQ versus TQQQ. Maybe this one I take.
Yeah. I don't know.
TQQQ is 3 times leverage of 3 times leverage of the NASDAQ 100. It's very dangerous. Okay. And if you just buy and hold it now, it will decay. There is this thing called a decay. That means your value will go lower and lower. It's very dangerous to buy standalone. And I will advise people to avoid leverage index unless you are professional. Okay. Yes. For those who have bought before, those born before 1970 and not invited to join CareShield, do you think these people should switch?
Well, and this is just my personal opinion, I feel you should, because the old ElderShield plan, really the coverage is insufficient, right? The amount that it pays is $300-400 and it only lasts for 5 years. It's insufficient. CareShield Life pays for as long as you are severely disabled. When you are severely disabled, and just recently I experienced it in my family, my father-in-law is like severely disabled, and severely disabled doesn't mean that you need to fall down, break your leg, don't need, You can be critically ill, you can have lung cancer, and you cannot do any of these 3 activities of daily living. Sometimes, the amount, I can tell you the amount of money that you spend is quite a bit. Sometimes you have to engage a caregiver, you buy all those diapers, can be very expensive, right? And if you have got, oxygen concentrator, very expensive. I think ElderShield Life is a bit, ElderShield is a bit dated. So I will encourage you to convert to CareShield Life. Of course, the premium is a bit more than ElderShield, but it is still affordable and you can use your MediSave to pay the premiums.
Should I sell my SGX and buy S&P 500?
I think, I'm not sure whether you are referring to the SGX stock or you're talking about STI.
Both.
Yeah.
Never mind. Both equally. Okay.
I mean, we have just explained that if you look at the map of equities, 54% of the stock market by market capitalization in the US. If you try to find Singapore, you can't find. The world of opportunities is out of Singapore. So why do we want to restrict ourselves just to the very small Singapore stock market? Yeah.
Okay, very good. Okay. This is Blite Chu always ask me this question. How to convince spouse that is investing in SG property is more risky than investing in S&P 500. Spouse is very keen to join the property craze, but I very risk averse.
Divorce lah. Okay, no, I'm just kidding. The threatened divorce. No, I'm just kidding. I don't know how to convince your spouse. Sometimes when it comes to investment, it is not just about being rational. It is about being what you are comfortable with. In truth, the S&P 500 is a lot more diversified than just buying a property, right? It's definitely the case. It should be safer. But Singaporeans has this love affair with property because it's not only just tangible. I can see it, I touch it, I hear people making money. But more importantly, there is that element of prestige. I can tell people that, hey, I've got investment properties. If you tell people that you've got S&P 500, not cool. Right, but you got to tell people that I got 3 investment properties, it sounds cool. So I understand that.
Face very good.
Yeah. So I don't have an answer for you because we can go on a very rational explanation to show why it is actually more dangerous. But ultimately, he has to make the choice. I'm sorry, I don't have a better explanation than that.
Okay. Is it good to top up the kids' special account if the adult special account is maxed?
Yes, why not? However, again, there is a priority of planning needs. That priority of planning starts from insurance. So when we plan for ourselves, first thing, you must have an emergency fund. Okay. Secondly, make sure you get your insurance right. And when we talk about insurance, protect all the income earner first, because you always protect the goose that lay the golden egg. So you protect the income earner first. After you have protected the income earner, you protect those that may financially impact you, like your children when they fall sick. After you have done that, get out of insurance and then start accumulating, right? So build up your CPF, invest for your retirement, invest for your children's education. Now, after you have done that and you still have extra money, then you go and think about, oh, should I buy extra insurance for my kids even though they don't need it? I just want to give them. Can I top up my money into the special account? Only after you have done the basic, then you go and do all these things that are later priority.
Yeah, very good. Okay. Sorry, questions there. I'm 57 years old. I have 50% in US equities and 50% in REITs. Should I sell my REITs?
Do not answer. Do not answer. Why? Because I mean, it may work for you because your REITs gives you the income, your S&P 500 gives you the growth, right? And if you know exactly what to do and you know the correct REITs to buy, and I think that's fine. Nothing wrong with that, and you can take the volatility because both are really just equities. I think, yeah, that's fine. So it's a really subjective question, so that's why we say it's quite difficult to answer.
We'd like to hear your views on Army MHA group in term insurance compared to private commercial insurance.
I have, right? I mean, if you qualify and you can buy MHA and SAF, last time it was called SAF Group Insurance, but they combine with the police force and the civil defense force, and so it's called SAF, MINDEF MHA Group Insurance. The underwriting insurance company is Aviva. You can buy $1 million coverage for yourself, you can buy for your spouse. The cost is very low, and I have it, right? I have it. I'll encourage you to buy it. But do not depend 100% on group insurance. The reason why you should not depend on group insurance is there is always that possibility that Aviva doesn't want to play with it, right? So Aviva may go to SAF or MHA and say, wow, you know, this business, I don't want to do anymore. Well, then, of course, MHA and SAF needs to find another group insurance or another group insurer to do it. Those of us who are old fogies like us, we will remember when we first started the Army, the group insurance was underwritten by ICS, Insurance Corporation of Singapore.
Yeah.
It's actually part of DBS, right?
Yeah.
They decided to do the business and the business was sold to Aviva. So thankfully, Aviva bought it. But there's no guarantee that another insurer want to take over this, right? And if they don't take over and you depend everything on the group insurance, then you have no more insurance. And if you want to buy another insurance at a time, if your health situation has changed, then you don't have. So buy it, and I'll say as a guide, if your total need for coverage is say 1 million, I'll say depend up to 50% for group insurance. The other 50%, it's better to buy from a private insurance company. Okay, I hope that helps. Yeah.
Okay. Should we invest at the current S&P 500 price?
It doesn't really matter if you are investing long term. If you are investing short term, then I'll say think again. Yeah, but if you look at the S&P numbers over the last 90 over years, yeah, I mean it has generally trended up. And it doesn't really matter when you start because ultimately your end point, if you need it in the next 15-20 years time, will always be higher than the current point. It's very hard actually to try and time, right? So, but I can say that this is a pretty good time now because the markets have year to date. I think the S&P 500 has fallen like maybe 17, 18%.
Yeah.
Market has gone up yesterday. The market.
Yeah.
So thereabouts. So it's not a bad time to actually put in some money.
Okay. What should I do with my China stock now? DD, Alibaba, sell or hold now?
I don't buy stock. I don't know. You know?
I always have a very bad feeling about China stock. First of all, you should never stock pick. Like pick individual stock, very dangerous. Second is I don't like China stock because there's policy risk, there's a lot of accounting fraud and all this kind of thing. So not so much now. I generally keep far away from Chinese stocks. Okay. Yes.
Yeah.
Which good investment company to invest on S&P 500?
Well, ETF, you can open an account with any brokerage, right? I mean, you can open with your interactive broker, Saxo. Now there are plenty, right? Tiger, there's so many. I mean, just compare the cost as long as you can accept the brokerage cost, and any brokerage you can open.
Okay. Should we upgrade our basic CareShield Life since is using MediSave to pay?
I guess you're asking whether you can buy the supplement, the CareShield Life supplement. I did. Okay. I think you can use up to $600 a year to pay the supplement. I did buy because I wanted a better coverage, right, beyond what the basic CareShield Life will do for me. So yeah, if you can afford it, go ahead and do it.
At 52 years old, is it too late to invest in S&P 500?
I'm 52 years old, exactly, 1970. Yeah, so it's not, because even if you are retiring in the next few years, you will not need all your funds in the first 3 years. So, our retirement is a long time, right? Well, God willing, on average, you'll live until about 85 years old, because that's the average life expectancy. So we still have easily another 30 years to live. And our retirement funds, we will need it at different stages. So those monies that you don't need immediately, that you may need only 10, 15, 20 years later, you can put it into equities market as long as you can take the volatility.
Okay, there's a question, is QQQ a subset of S&P 500? No, there's some overlap, but it's not the same, okay? Yeah. What is the advice for sandwich working adults in terms of aging parents with minimum retirement plan and coverage?
Wow. Okay, it's a very general question. Yeah. I'll tell you what I did for my parents when they were alive. Both of them are gone now. Yeah, but I bought, my father couldn't buy insurance because he was too old. So he had basic MediShield Life. My mother, I bought him an Income Shield, Plan B, so that if he's sick, he can go to, that was the only insurance that I bought for my parents. They had nothing else. Well, and in terms of their retirement, there were 4 of us. So basically, we supported them in their retirement. So every month, all of us give them allowance, and that was actually more than enough for them. So that's taking care of our parents, right? Because our parents, as much as we love them, they are a financial liability for us when they pass on. So we make sure that we have insurance coverage for them. Now, the other thing that I know is a bit morbid, but we did it, right? And that is, well, you and your siblings may want to come together, and in a way have a fund for funeral expenses, right? It can be quite expensive, yeah, and sometimes it is quite sensitive only upon demise that you say who should pay, and all that. So something that you can do is everybody can, and if your parents are insurable, you can buy a small insurance policy, but if not, pull the money together, start saving towards it. For your children that's below, I'll say, like I mentioned it, but I don't mind repeating it, the most important insurance for our children is the hospitalization plan. They must have, because if they fall sick, it can eat into your savings. The other thing that, well, if you want to have is a small critical illness policy, just in case they are critically ill, and you want alternative treatment that cannot be paid by or through a hospital plan.
Okay, cool. We got probably take one or two more questions. I did still too many questions. What are your thoughts on unit trusts like BlackRock, Fullerton, Asia, High Yield, and PIMCO?
I mean, they are fund managers, right? BlackRock, we use BlackRock at Providend, but we only use the BlackRock Index Fund, right? So we like Index Fund. I've explained enough because we don't want to beat the market. It's low cost. BlackRock has active funds. Well, if you believe in active funds, BlackRock is the biggest fund manager in the world, right? So if you believe in BlackRock, it's fine. Fullerton is very strong in Asian bonds, right? It's a Singapore manager. It is a Temasek owned, Temasek and NTUC income owned. 51% Temasek, 49% NTUC income. They do a decent job with Asian bonds, yeah. But again, they are active managers. Please do your own comparison. It's very hard for us to give advice like this.
Okay, cool. When we are into retirement phase, where should we park our funds?
With me? Okay, no. Okay, so, well, definitely CPF as a starting point if you have not topped up your CPF. But when one is retiring now, in Providend, right, we actually bucket our clients' money into various buckets, 6 to 7 buckets. The first bucket and the second bucket is for monies that you die must have regardless of financial markets, right? And then the subsequent buckets are buckets that you only need later on. So we have, like the first bucket that we call income bucket, they are mainly your CPF life, your retirement income plans, your bonds. And then the second bucket is mainly cash. It will tie you through the first 5 years, no matter what happens to the market. And then subsequently, the third, fourth, fifth bucket they are invested in portfolios with increasing amount in equities. That means the third bucket will have more bonds, lesser equities. The sixth bucket will have almost 100% equities. The idea is that the more time you have, you can take volatility risk, right? So it's really a diversification of different assets.
So someone asked a question: should we engage a wealth consultant advisor?
I'm biased, of course, because I'm in the business. Okay? But well, I'll say this: if you know how to do it yourself, and you love to do it yourself, don't engage us, because you have to pay us money, right? You save money by doing everything on your own, but not everyone likes it. For some who likes it, and we have clients who actually have been doing it on their own pretty well for a period of time, they still come to us because they have reached a stage of their life whereby they think that their time is better spent doing other things like traveling, spending with their family. Then you pay a trusted advisor to do it.
Okay, so Providend is a fee-only advisor. What makes you different from the other guy? Actually, seems you fee-only, I cannot understand.
Okay, so there are three ways financial advisors or wealth advisors or whatever you call it paid. One is commission-based. All of us are familiar with that. Now, most of the advisors in Singapore are commission-based. Okay, they make money only when you buy a product.
Conflict of interest.
There's always that potential of conflict of interest. It doesn't mean they're dishonest. It doesn't mean they're not competent. It doesn't mean they're not knowledgeable. It's just that there is a potential conflict of interest for sure. Now, second, fee-based. Fee-based means they charge you a fee, but when you buy products, they also take commission. There are some advisors out there, Money Hour, for example, is fee-based. There are some individual advisors who are fee-based, right? So they charge a fee, but you buy, say, insurance, they take commissions. Providend is fee-only. Right, we started fee only since 20 years ago. Fee only means clients come, they pay us a fee, we don't take commissions at all. Right? If let's say clients buy insurance from us, we rebate them 100% of the commission. We don't keep a single cent.
The commission from the product brands.
That's right.
The product owners.
Yeah, thanks for that. So let's say we arrange a contract of insurance for you through Aviva. Aviva pays us, let's say, 150% of your 1 year's premium. We will return 150% of that to you, minus off some bank transfer charges. So we don't take that. Now, why do we do that? It's because we want to make sure that when clients come to us, they have 100% assurance that whatever we recommend to them has no biasness. It's really for their own good. We want to give them that peace of mind that when they come, that concern is not even in the picture. Now, I want to say this. It doesn't make us more competent. It doesn't make us more experienced. It just takes away that conflict of interest and give you that assurance.
Yeah.
Now, whether we are competent, experienced, you still have to assess us.
Yeah. Okay. Thank you. So I just want to say that the time is a bit exceeding the time already. We are very, very privileged to have Christopher Tan from Providend, to share with us all his wisdom. Today we have learned not just about how to remain calm and remain zai in times like this, and also how the rich become rich. But a lot of all the Q&As, you really pick up all these things from him, right? He's a really good man. He even structured his business so that there's no conflict of interest. A great man that I really respect and trust a lot. Okay, cool. Wow, amazing 2 hours stream. Learn so much, great chat. Yes, I agree. Okay, Mr. Lu so tired already. Jet lag can die. My jet lag haven't over yet. I gotta fly again. I gotta go Middle East. Yeah, can die. Yes. Okay. Yes. So good. Yeah. So yes. So I hope you guys find it useful. Okay. If you guys find it useful, those who haven't given a like, please give a like. But really, I think you can. For those who only watch part of it, you can go back to watch on YouTube. YouTube will continue to have this. It's in 1M65 YouTube channel. Remember, hit the subscribe. Okay. For those people who meet the mark, his firm here is Providend. Is in Duxton Hill. Yeah, very nice office. You can come and see him. Make an appointment with him. But more importantly is that we all have benefited tremendously from this great man, right? Okay. A huge blast of light as a representation of applause.
Thank you.
Okay.
Thank you,
yes.
Thank you so much.
Okay. Yes. Yeah. Angie, you missed the first part. catch up in YouTube. Yeah. Okay. Yes. So good. Yeah. Okay. Good. So I hope you appreciate this kind of sharing. Okay. Really good. Really good experience. Really good experience. Really knowledgeable. And you guys have a good. Yes, you
Long
guys have
weekend.
a good long. Oh, it's a long weekend.
Yeah.
Ah, okay, okay. Good long weekend as well. Yes. So B and I will be traveling to Israel. Okay. B will be hunting for nice Dead Sea
Havana.
Dead Sea products for you guys. While I try to close a big deal. Okay. Yes. So so hopefully she can find some exciting deal and a bit of holiday for us as well. Okay. Yeah, work until can die already. Yeah. But to me that is still work. Kate Lou will hold the fort. Okay. Yes. So good. Okay. Thank you for all you guys. Tonight was a great this afternoon was great attendance. Okay. Yeah. Thank you everybody. Yes. Yeah. Mask. Yeah. The mask is very good. Okay. Yeah. Okay. Havana. Yes. Okay. Thank you, Jackie. Thanks, Yvonne. Huh? What? Oh, you all know anything from Israel or about skincare products? Write to our sales line WhatsApp to us. Okay. Really good knowledge for a single mom like me. Thanks for both of you. Very humble and nice financial. He's a really good teacher. Okay. Yes. Yeah. Okay. Guru and Gundu. Yes. So thank you. Okay. Thank you very much. Okay. Retirement. Okay. Good. Okay. You have some more questions? Yeah. We can take it offline. I will have my next session. And then I can share some of these things with you. So some questions, I think 80% I can answer. Looks like we are quite aligned, that I'm glad that...
So you're not Gundu.
70-80% of his wisdom, okay? Max, I can only reach there. The other 20-30%, my whole life also cannot reach there. Cool. Okay, good. Okay, good. Okay. Episode 4 is my best. Okay, I think it's talking about your session. Okay. All right, cool. Okay, thank you very much. You have a good weekend, good long weekend. Okay. All the rest of questions you can send me directly. I love Israel, a beautiful country. It is indeed a very beautiful country. Okay, I've been there maybe 30 times or something. Like
really?
That. Yeah,
Oh, my.
Yeah,
Wow.
30 times. Okay,
There once.
yeah, I even went there during wartime when rockets were flying. Okay, please come back again to the channel, Christopher. Okay, thank you. Very difficult to invite him one day.
Thank you.
Big mega shot, to be able to invite him. Yeah, big mega shot.
Shot.
Okay, cool. Okay, so great. Okay. Thank you, ladies and gentlemen. You all have a great weekend, okay? Thank you so much, Thank you so much, James, Bell, just freak. Okay, yeah. Okay, thank you. All right, thank you. Okay, I'm gonna off Facebook, Instagram first. Thank you. Okay, and I'm gonna off YouTube. Facebook. Okay, and I'm a Providend client. Please ask Chris if he plans to do another series of retirement wealth videos.
Yes, we are.
The older one are no longer on the Providend website. By the way, I'm a Providend client.
Oh, okay.
Okay, John Chan. I think you might know him.
John Chan.
Yes. Okay. Yes. Great. Okay. Great. Okay. Thank you, YouTube. You've been great. Thank you. I'm going off it right now. Okay. You have a great weekend. Okay. Thank you. And okay.